Welcome, I'm Mike Bellafiore. Today we're going to talk about a trading edge. How do you obtain and maximize your trading edge? So the goals for this presentation are going to be to define trading edge. You're going to be a little surprised about that definition. We're going to teach you guys how to find your edge. And what I see is that often traders don't recognize their edge, so we'll go over that. We're going to share best practices on maximizing your edge. Sometimes it takes a little bit less smartly to maximize your trading edge. We'll help you get on the path to become a consistently profitable trader, and we're going to introduce SMBU's new 3-day training program in New York City, which we're calling our training camp. So what's a trading edge? The trading edge overall is any play at all, any setup at all, where after you record it, you're profitable. And you might have a trading edge that he can't trade, all right? You might trade a setup that she just doesn't understand and does miserably. We might look at your results for a pullback trade. It might be entirely positive, hers might be negative. It's unique. It's unique to you. And there's no profitability for a type of setup that's not good enough. So we don't like throw away our trading edge because we think it's not cool, or it's not good enough, or it's not macro enough, or it's not long-term enough. If you're making money with a setup, we want to spend a lot more time there deconstructing why we're making money in the setup, what the setup is, why it makes sense to us, how we find more of these setups, how we trade them bigger. Okay, we spend lots of time on them. So trading edges, oftentimes they can be very small. So we talked about this a lot. If I make a trade, my win rate when I'm trading well can be just a little bit over 50%. There are certain setups where my win rate's even lower than 50%. But the best traders in the world, guys who trade, billion-dollar books, oftentimes their edges are barely over 50%. So the edge is small. I mean, think about that. The best traders in the world are right and wrong, 1 out of 2 times. So you're wrong a lot, right? Those edges are unique to you, and they change. So the way that I traded when I first started trading is not the way that I trade now. The way that I traded in 2009 is not the way that I traded now. In 2007, not the way I traded in 2003 to 2006. It changes, it evolves. The most important thing about you becoming a profitable trader is learning how to think and develop good risk-reward trades for the present market. We're in a strong market. I promise you, at some point that's going to change. I don't know when, but we're going to have a different market. The market's not just going to go up for the next 30 years the way it's doing now. So we want you to be thinking about trading a strategy, recording your results for each particular strategy, and seeing which plays, which setups you're profitable with. So we're going to roll out a whole bunch of different types of trades. You'll record them, you'll tag them, and you'll see which ones you trade well. And as I said, anything from a scalp to a macro trade where you have a profitable setup, where you have an edge, we want to do more of that, okay? It's perfectly okay to be a micro scalper. Okay, if you come in and you never learn anything about the fundamentals of a company, but you can make money, that's fine. And conversely, if your interest is macroeconomics and you don't want to really learn how to read the tape, fine. Wherever you have an edge. Don't let somebody minimize any edge that you have. All right, recording edge. So for us here, we use something called the SMBU Performance Center powered by TraderView. So every day, our guys are importing their trading results into SMBU Performance Center. And our guys go in and they tag certain trades, all the trades that they've made, and it spits out the trades that they're trading well. It spits out where they have edge. All right, so guys on our desk should be able to tell you, these are the setups that I make money in. Here are the specifics to the setup. And it's not just their feel or their thoughts. These are verifiable, recorded, tagged data of what they're doing well presently. We used to have something called the S&B Chop Tracker to do that when we first started. Now we have the S&B BU Performance Center. We also, on our desk, guys get daily reports from a data warehouse, crunching data of what they're doing well, what time frames they're trading best, what stocks they're trading best, the price of those stocks. So some guys trade stocks over $60 worse than stocks from $20 to $30. Some people trade better from 9:30 to 10:30. Some people can't trade from 3 o'clock to 4 o'clock, but can trade from 11:30 to 3 o'clock. Some people don't trade well on Mondays. Okay. So all of these things you want to be recording, and we do that with a warehouse. You must be able to verify your edge through stats in real time. There's too much, particularly in the experienced trader space, particularly in the retail trader space, particularly in the developing trader space, where people have this unverifiable feel for what they do well. This is the data age. You've heard the phrase big data? Okay, get on board. You have to be able to verify what you're doing well with your results. Okay, you shouldn't say things like, I know it when I see it, because I don't know what that means. When we interview people in this room, even if they have a track record and those people tell me I know it when they see it and they can't tell me the variables of the setups that they really like the best, we don't hire them. We just had a guy the other day who said that very same thing to me, and I'm sure he's a little bit confused about why we didn't hire him for the fund, because he can't tell me how he makes money. You should be able to tell me that after 6 months of trading. All right, edge. So there's different ways to get edge. One of the ways that's really, really great that people don't necessarily talk that much about is to follow the masters. Follow the masters who have a verifiable edge. So find somebody who's done it, find somebody who is profitable, find somebody who has a track record, and try and co-opt what they're doing. Don't copy, co-opt. Just like a great painter in the past served as an apprentice, you can serve as an apprentice to masters and try and co-opt some of those trades. While you're doing that, what's the most important thing? To learn how to think. To learn how to think like a pro trader. The Playbook Daily. So I wrote, my last book is called The Playbook, and I talk about this archive exercise for traders to understand what they trade best. And so each day at the end of the close, you go through this exercise where you write down with variables the trades that made the most sense to you. And you do this for a long period of time. And while you're doing this, you're developing a series of setups where you can trade the best. You're getting a compilation of trades that you trade best. Over daily, over a long period of time, you're going to get this compilation. That's a good way to find your edge, doing this exercise each day. You can backtest for edge. All right, so one of the things that you want to be doing, I just talked about this in the Playbook Checkup, is you should be spending a certain amount of time, if you're a developing trader, playing around with backtesting ideas. Just play. Come up with some strategies, backtest them. You know, on our desk we have a Q&A function. You can forward test ideas, get the results of that, and see if they work. We have a backtester. You can backtest your ideas, see if they work. That should be a part of each one of your trading sessions. You can chunk data from setups and use direction. So you might test an idea. You might go to our backtester and test an idea. Let's say you want to backtest whether or not stocks that gap up over 3% and are holding above the opening range after 10:15, and I'll sell it at the end of the day, that have an average daily volume of over 1 million and that have an ATR over 2. Let's say you want to backtest those trades. You run it, and let's say it comes back negative. Do you just throw away that backtest? Does that just mean that that setup doesn't work? No. It means taking all of those setups every time doesn't work. But you can decide to add discretion to that chunk of data. You can say, I really like these setups, and there's big winners in these setups when I look at the data. But what I need to do is I need to add more variables to that. So for instance, maybe I'll add the variable of a clean tape. So I'm going to take the setup only if it does all these things and the tape is really, really clean. And if I do that, then what are my results? That might lead to very, very profitable results. So you're going to be doing all these back tests, and you can decide setups, use that chunking of data, but then use discretion to trade particular ideas. Okay? So back tests with discretion. And then you can automate. You can, if you find things that are really just working well right away, that's great. You want to go to forward testing and see if we can automate something like that. All right. So one of the things that I find when I do my back testing is that inputs are very important. So as we said, if you do a back test and it doesn't find edge, it doesn't mean we want to throw it away. Because just think about the inputs that we just talked about. Daily volume, ATR, price of the stock, gap percentage, entry and exit rules, time of entry. Those are all things we talked about for this particular idea. We can change all of them. We can say gap percentage is not 3%, it's 5%. We can say ATR is not 2, it's 4. We can say price of stock is not all prices of stocks, but it's only stocks above $20. We can clearly change our entry and exit rules. I did a test 2 weeks ago where I found that it worked using a 5-minute candle close below VWAP, and it didn't work if the stock ever just traded below VWAP. Just making that one tweak turned my strategy from clearly negative to clearly positive. So those inputs that you're putting in oftentimes need tweaking. And when you're trading as a discretionary trader, if my back tests sometimes just need that one tweak, and sometimes your trading just needs that one tweak. So we spend a lot of time building custom filters to maximize our edges. So you find a signal, you add discretion, and oftentimes you can really maximize your edge. So, a good example of that is a blog post that I just wrote, and it's about skill, then edge, and then profits. And so, oftentimes, people who are developing as traders want to go right to the edge. They just want to learn the edge. Just show me the setup that's profitable. The problem with that is that if you don't have trading skills and you have an edge, you're not going to make money. Does everyone understand that? If you have edge, if you found edge, but you don't have trading skills, you're not going to make money. You have to have trading skills plus the edge to then get the profits, because you're not going to know how to trade it. You're not going to know when to enter, when to take off, when to add size, when to get out, when the stock you should scratch it, when you should really be aggressive in it. Those are very important for edge. I see that there are a lot of traders that don't recognize their edge. There's a lot of good in a lot of our trading, even for somebody who's not profitable. But oftentimes, people just don't see it. And so I got an email the other day from somebody who was jumping back into the game, and their confidence was low about whether or not they were going to be able to be successful. They had been unsuccessful in the past. They're jumping back in. Gentleman didn't know. And in the email, he wrote a rough outline of a trade that he should immediately start testing. He should immediately start building from to re-begin his trading career. He had this sort of moving average theory that he had developed that he just sort of put in there. It was just nonchalantly, he put it in there. We're actually testing that theory for him right now. Andrew Faldy's actually testing that for him. The guy who runs SMB Systems on the education side, we're testing that theory for him. But lots of times people are seeing only the negative in their trading. Maybe for the month they were down $5,000. Well, in that $5,000, are there profits? Are there trades that you really do trade well? Oftentimes there are. And sometimes it really just takes one tweak to really make the difference. I had a conversation with somebody on our desk recently, and the trader had been an unprofitable trader before they came here. And the trader had learned how to trade off of 15-minute candles. And when he first started here, he was not doing as well as he wanted to, and he decided to extend his losses. He decided to extend his stop losses for his particular trades. He was looking at his results. He's like, if I just expand my stop loss, that'll be the thing. And he did that, and his results got worse. And so what did he do? He went in and he did the opposite. He focused on the trades where he was in the money right away. And if you think about that, that changes all of your preparation. That changes all of your strategy while you're in the middle of a trade. That changes the way you would exit everything. That helps you keep profits for some traders much more. It simplifies your trading, very much so. In this case, it got the trader into trades, into different trades, and into trades that he traded better. And so that one tweak, and I think oftentimes people feel like they need to expand their stop losses, and this is a best practice of somebody who made significant progress by doing the reverse. A change of time frame. So I got a letter recently from a particular trader who read one good trade and had been trading on a longer time frame, read one good trade, and decided to take his strategy on a longer time frame and condense it to a shorter time frame, and found that his results were increasingly better by trading on a shorter time frame. The person actually doesn't trade US markets, trades a foreign market. But that's something you should be thinking about. You know, edge is quite special, and there are times where things work fine on longer time frames, but better on shorter time frames. So we trained now an analyst who we'll nickname VC, and I think he offers a really good anecdote about edge. When I first started working with him, I told him just focus on two trades, trend trades and second day trades. Just focus on them. He did. He built filters, custom filters for those setups. And when he did, he got to about somewhere between $4,000 and $6,000 a month in P&L. And this was somebody who hadn't been trading for a year, which is, I think, respectable. And he did that by maximizing his edge, by taking trades where he was profitable, by building custom filters for those trades, by not missing any other trades. You can't miss your best trades in this market. It's too unforgiving. By trading those setups bigger, by trading them more often, he went from making a little bit to making more. Finding and increasing your trading edge. One of the traders who's made really nice progress on our desk, another good example of a best practice for you guys to think about, had a very specific scalp trade that he was really good at. And the trader and I discussed before the prior month why he thought he was underperforming and where he thought his edge was. And he just sort of nonchalantly mentioned this trade where he felt he had edge. And I said, have you built custom filters for that setup? He said, a little bit, but I need to do a little bit more work on it. And I said, well, how can I help you going forward? And he said, I'd like a little bit more buying power and share size just for those positions. And so we bumped him up. And I said, you build your filters, I'm going to bump you up, and let's see how you do. And for him, he had a pretty good month. He had made a lot of progress last month because he found what he did well. He built technology to spot all of those setups. We bumped him up in share size and buying power, and he stuck with those patterns. So, a good example of edge is the Russell imbalance. Our firm has edge for these particular plays. if I were to just tell traders how to trade the imbalance, they wouldn't make money until a while. You'd have to do it multiple times. I find that when people try and trade the imbalance, inevitably, they have this huge rip. I think pretty much everyone who has traded the strategy has had at least one time where they've lost like at least $6,000 by hitting the wrong keys, by being on the wrong side. But after they try it 20 times, it's not enough to just know the strategy. They have to then gain the edge, gain the skill in real time. But after they do it time and time again, they do get better. Because if you just think about it, just for that strategy, when do you enter? When do you exit? When do you flip? When not to flip? When do you add more? When do you sell before the close? There's a lot of things to think about. Okay, so that's a good summary of edge. You need process to be a good trader. You need process to be a good trader, and a lot of what we teach you guys in the first week is about process, but you also need edge. But if you just have edge without process, that's not going to help you. And you're never really going to develop edge if you don't have process. Because as I said, if I say to you, second day play is a trade that's worth your attention, and I explain to you the variables of a second day trade, the first 15 times you trade it, you're really not going to have edge. You're going to have to trade it, review your work, think about how to tweak the blueprint that I've given to you to make more sense to you, how to add technology so you find the best setups, thinking about for you when to enter and when to exit, what are your exit rules for those setups. You have to do all of these things. You have to sort of see when it's really the best trade for a second day play, when it's really the best trade. You have to be able to see it and pull the trigger. All right, so I see lots of people have edge that they're not maximizing. There are lots of people that are consistently negative that if they tweak things, they can move from consistently negative to consistently profitable. I see lots of traders who leave a ton of money on the table because they're not using they're not being bionic. They're not using technology for their best setups. There's too much discretion. There's too much, I'll see it, and then I'll react. That's not good enough in this market. You've got to be powered by bionic technology. You have to be. Okay? So we have a 3-day training camp coming up, and we're going to talk about, for developing traders, for retail traders, 5 areas where we see traders can make the most progress, and that in these 5 areas, you can go from consistently negative to consistently profitable by getting better at these 5 areas. Their stock selection, being more bionic like we talked about today, having an elite process. You want to be world class with your process as a trader. By understanding your edge, by maximizing your edge, by having somebody look over your edge to verify whether or not it is truly sustainable. All of this will leave the trader, will leave you guys and the people that come in here a better trader and on a path to being consistently profitable. Yes, trading is hard, but there are ways for you to find out how good you can be. There is a path that you need to go through to get there, but if you're willing to sort of go through that path, you're willing to do the work, you will find out. If anyone has any questions, shoot me an email or look us up on Twitter, and we'll answer any questions about the training camp coming up.